Cheesy quote time. Short path. I fudged that up already. Okay. The longest path to wealth is often the shortest. Okay, think about that for 1 second. That is actually talking about the parable, the story, the legend of the turtle versus the hare. Now, everyone has their money on the hare, right? That's a metaphor, by the way, for stocks, right? Individual stocks like Tesla, Apple, Microsoft. People are throwing their money into it. But then there's the hare. The hare, we all know, won the race. That's the index fund. The S&P 500, the top 500 companies, all in that index fund. No one, and no one's mama either is going to be betting that the index fund is going to outpace things like Tesla in the next 15 years. Even right now, as I'm thinking about it, knowing better, I still feel like there is no way an index fund comprised of the top 500 companies can beat an individual company's stock price like Microsoft, Apple, or Tesla. But yet, when we look at large scale data and take a look back at 30 years ago, was Apple one of the top companies? No. So one top company got kicked out to make room for Apple. So 30 years from now, what are the odds that the same top 30 companies we have today, the Microsofts, the Amazons, even the Teslas, are still going to be in the top 30? Well, if history teaches us anything, it's none of them. Maybe one, maybe two, maybe three, but definitely we will not have the same 30 companies still be the top 30 companies. So this is one reason why index investing actually outperforms almost any other type of investor or investing strategy for the long run. That's the key there, for the long run. And actually, I think it's an oxymoron to be investing for the short term. What the heck is a 2 month investment? That's not an investment, that's a flip. You're buying something, selling it for higher. You're not really believing in something if you can only hold on to it for 2 months, unless you believe you could sell it for more than 2 months. But then again, you're not looking at the company, you're not looking at fundamentals, you're not even really looking at numbers much. You're just looking at someone paying more than you did for that same product. But I do believe that even though index fund investors tend to outperform every other type of investor for a long period of time, there are huge disadvantages to being a pure indexer. Okay, so this is the key here, a pure indexer. So if you're 100% index funds, first of all, I'm not worried about you. But second of all, if you don't have certain privileges like time or higher income, and you don't need high income, like you don't need a six-figure income to be a great investor and have millions of dollars later on the road, but it's going to be way later on the road. So if you're in your 50s and you want to be an index fund investor, good for you. That's amazing. You still have a lot of time, but you probably don't have 40 to 50 years of comfortable, high quality life. Maybe you do. I hope that I'm wrong. I hope that companies like CRISPR, like Edit, by the way, I do invest in CRISPR and Edit. They are biopharmaceuticals with working on human engineering and all sorts of cool things like that. I actually think it's a pretty good pickup today if you're buying CRISPR. They dropped to like $88 at the time of this recording. And by the way, I bought them for 50, rode all the way to 200, dropped all the way back to 88. That's how it goes sometimes in the world of individual stocks. However, back to the topic at hand. If you are a little bit older in life, right, or you want money a little bit sooner without being able to have a higher income to invest harder, then index funds may not be the way to go. At least not 100% index funds. And here's why. Alternative asset classes such as any cryptocurrency, like let's take a joke coin like Shiba. Putting $1,000 in Shiba just a year ago from the time of recording this would be something like 700 million today. Now, obviously, we're okay with a fraction of that, and that might be a bad example because it is a joke coin. But humans love humor, and it does have some capabilities in the world. It's not just like a picture you look at. And by the way, it's okay to look at a picture because Mona Lisa is a picture. What is that but not just paint or whatever, right? And yet it is worth millions of dollars. So I'm shifting the topic a little bit to NFTs and alternatives like that, even things like Pokemon cards. the reason why you want to have a little bit of your portfolio invested in these alternative classes is because they can skyrocket and take you to the moon without risking your entire portfolio. Okay, does that make sense? Now, for reference, before I move on just a little bit deeper into this topic, I want to make sure that everyone here knows that most people who pick their own stocks, their own investments, unless they're doing indexing, they're going to have a bad time and not even know it. The average investor gets about 5% returns. Now, an indexer who sticks to it gets about 10% returns. The difference between 10% and 5% annual returns, if you're investing $500 a month for 40 years, is somewhere like $2 million. It's a really absurd amount of money. So be very careful trying to beat the market or anything like that. However, if 10% of your money or even 25% of your money is invested in alternative asset classes, then you do have a chance of beating the market and beating it by a huge margin, as long as you know this is for the shorter term. Now, sometimes some of these asset classes can skyrocket for X 100 if you hold on to it for 5-10 years. For example, Pokemon cards. A box of Pokemon cards from the first set ever, the first edition base set, at least in the United States, it used to go for about $1,000 back in 2010. Today, well, one just sold for over $300,000. That's pretty impressive. Imagine having a $10,000 portfolio back in 2010 and putting $1,000 into Pokemon cards. That's some pretty good returns. You're not going to get times 300 returns when it comes to an index fund, especially in a 10-year period. It actually takes about 7 years to double your money with an index fund, okay? 7 years on average, sometimes 6, sometimes 10. However, when the markets are down, you can make a buttload of money with way less risk with an index fund. So for example, in 2020 of March, if you were buying an index fund back then, your money has doubled in less than a year. Now it's like 1.5. So that's a lot of money for relatively not so much risk. But market timing, right? Waiting for market crashes isn't the best strategy either, because you're going to be waiting for so long that the market is just going to keep increasing over that time. By the time it finally drops, it's still not what you could have bought stocks for if you just started immediately. Not always the case, but most of the time it is, because stocks tend to go up 2 out of 3 days. So majority of the time, stocks are going up. So how can you get into alternative asset classes? Well, start learning. Start watching some videos on Pokemon cards. I think if you go right now and buy some Celebrations product, right? That's the 25th celebration of Pokemon. Boxes such as these, they're going for about $50. Now, good luck finding them in the store, but you could probably find one online for $62, a little bit higher. Now, boxes like that in the past actually skyrocketed, where the box from the 20th anniversary, I believe, used to sell for $50 and now sells for about $200. Boxes from further back used to sell for $50 in the store and now are selling for $2,000. So Pokemon's just one thing. Now, another way you could get into alternatives is through the app Vivi, where you could buy really rare NFTs. And in fact, Disney, I invest in Disney, full disclaimer, just made a collaboration with Vivi. That's right, you can actually buy Disney NFTs on the Vivi platform. It costs about $60 per NFT if you get them off the Vivi platform. However, good luck getting them, because there's usually a huge line and people trying to buy it and the server keeps crashing. But nonetheless, if you were able to buy like the Homer Simpson one, Choking Bart, which just came out a couple days ago, well, you at least tripled your money by simply putting $60 in. How long is it going to take you to triple your money with an index fund? Probably a very long time, maybe a decade. But again, it's a smaller amount of money, which is why a smaller amount of your portfolio should probably be allocated to some sort of alternative to indexed funds. Now, the last point I want to make is diversification. And I promise you, I'm out of here. Drop a like and a comment if you enjoyed this content. Last point is diversification. When the market crashes and the financial institutions are a mess, no one cares about no one's gonna care about regulating too much your Bart Simpsons or your Pokemon Yu-Gi-Oh cards, whatever it is. They are gonna be non-correlated to the financial institutions, meaning the price of these assets is not going to be as close to stocks or real estate or even crypto for that matter, because well, they're just not connected. They're not related. That's really important. And I think that as time moves on, we will see financial institutions actually holding on and diversifying into sports cards and other memorabilia. So be very careful when you're getting into these types of things, because it's very easy to get addicted. I bought a whole bunch of boxes over there. I open them, and that is why they actually tend to go up, because most people don't have what it takes to hold on to them for a very long time. And just to show you, I mean what I say. Check these out. Bought some of these over here. I got 3 of these. You could probably pick these up for about $60, $70 each. But look how cute that Pikachu is. People are going to want to pay premium for that cuteness. Look at that fat belly. That's a healthy Pikachu. And a great Christmas present, too. Especially for people trying to think back to 2021 and the early 2020s. Man, I wish I could get something from back then for Christmas in 2040. Well, I'll sell you mine for like $10,000. Now, it probably won't reach 10K because a lot of people are stocking up on these. But you never know. And with that, peace out, Girl Scouts, no doubt.